Okay, great. We will get started. So, good morning, everyone. Welcome to Multi-Entity Month End with Xero. My name's David Tuck. I'm the co-founder and CEO at Mayday, and just really excited to have you join us this morning as part of this pre-RP category that we're operating in. So businesses at the upper end of the Xero user base. We're so excited about the opportunity to be useful to you, deliver you valuable content about how you can best grow with, function with Xero as finance teams. I'm incredibly fortunate and so excited to be joined by Symons from Joiin this morning and Harriet Hope from Arbolus, who's a mutual user of both Joiin and Mayday. So I'm just going to pass over to Harry to do a quick intro. I'll then do a quick intro to myself, and then we'll hand over to Harriet, the star of the show.
Hi everybody, thanks for the introduction, David, and yeah, very much in the same vein as you. We're very excited at Joiin to be kind of part of this webinar. Just working with Mayday, and then really nice to have Harriet on board as well. So for those of you that don't know, Joiin is a consolidated reporting app add-on, I guess you could say, for Xero usage, but we also operate within the QuickBooks and Sage Marketplace as well, kind of really focused on that kind of automation of something that can be potentially quite a kind of a troublesome process if you were to complete your consolidations on Excel or another. So yeah, thank you very much. Looking forward to this one. Nice to see some familiar faces in the participants, and I'll pass back on over to Harriet. Cheers.
I'll just jump in and then I'll go over to Harriet. Thanks very much, Harry. So my name's David Tuck. Like I said, I'm the co-founder and CEO here at Mayday. I'm an accountant by training. So did my qualifications, then moved out, headed up a succession of startup and SME finance teams. I've been working in accounting technology for about a decade now. I was previously the founder and CEO of Chaser, the accounts receivable credit control software, which won Xero's App Partner of the Year in 2016. And at Mayday, we are incredibly excited to be mending month end. So all of the work between accurate bookkeeping and accurate accounting, bringing to bear brilliant technology and automation for that. We're starting with the multi-entity pain points, building the intercompany module for Xero. So that tackles pain points, firstly, with recharging costs and revenues between your related entities. Secondly, where you've got cross-entity bank reconciliation issues, where one entity pays a bill or receives money on behalf of another. And then thirdly, keeping your intercompany loan accounts in balance. We've been live for a year now. We're very lucky to have fantastic customers, Harriet being one of them, who has said Mayday gives Xero wings for the way it's enabling them as a business to grow with Xero, and very excited to do a quick demo of the product later. We're also running a promotion with a lot of people, kind of new year, new habits when it comes to month end. So we're running a promotion whereby you can get 50% off Mayday into all of 2023 if you sign up before the end of January. So stay tuned for details after this webinar about how to take advantage of that. And there'll be a link in the chat to be able to sign up if you just can't wait to get started. But that's enough about Mayday. Over to Harriet.
Great, thanks, David. Cool. So I'm, as it says on screen, FC at Arbolus at the moment. So we're a multi-entity Series A startup. We've got about kind of 150 people globally. My background is cut my teeth at PwC audit, as lots of us have done. Quickly realized that maybe there is a more exciting accounting time to be had in the startup world, and have spent several years kind of with different stage growth businesses. So worked at Peakon, which was kind of on, they'd just transitioned to outgrown, I think it was QuickBooks onto NetSuite, and so we were kind of fully ERP'd there. And then I had spent some time at Quantico, who you guys, well, some of you might have heard of. They're a kind of in-house outsourced finance team. So we'd have a portfolio of several different startups, usually kind of seed, early stage. single entity, so not so much of kind of the multi-entity problems faced there, and then have been at Arbolus since last June. Yeah, like David said, we're kind of very much at the top end of Xero usage, kind of trying to stretch that as far as we can. We're four entities globally, and growing, so very, very exciting times, and yeah, very happy to be working with tools like Mayday and Joiin to help us manage those growing pains a bit more smoothly.
Amazing. Well, thanks so much, Harriet, and just thank you so much for sharing your time and insights. We were so fortunate that Harriet agreed to be the panelist for this webinar, because she has such an amazing range of experience. She mentioned Peakon, which is scaled all the way to ERP, Arbolus now, which is in that sort of pre-ERP category at the top end of the Xero user base, and her time at Quantico, who are incredibly well regarded for their FinOps specialism. So how best to kind of scale your tech stack as a finance team. So we are just we're incredibly fortunate to be able to benefit from Harriet's insights this morning. So we'll just move on now to loop back to the poll. So if anyone hasn't had a chance to answer this already, this is kind of speak now or forever hold your peace moment, so that you should be able to either see it on screen, the poll, or it's click on the little poll icon in the bottom bar. But we'd love to know, what's your target number of working days to close month end? 5 or less, 6 to 8 days, 9 to 11 working days, 12 to 14 working days, 15 or more, or you don't work to a target to close. So we're just going to do a final couple of seconds for people to answer that poll, and then we can bring the answers up on screen. All right, 5. I'm not going to do all the numbers. Okay, great. Well, let's wrap it there. Okay, hopefully everyone is seeing the answers on screen. So we have some speedsters in our mix. So 15 out of the 52 respondents closing month end in 5 days or less. And then 11 to 21%, 6 to 8 days, 13 in the 9 to 11 day bracket, another 8 in the 12 to 14 days, and then 3, 15 or more, 4, no target. So a nice distribution there with a focus in the 5 or less to 11 category. So it looks like 75% of our respondents are closing month end within 11 working days or less. Really, really excited over the course of this webinar to provide you with some insights that can bring that down even further. All right, amazing. So thank you very much, everyone who responded to that. That was really useful. Harriet, we're just going to jump over to you. A little bit more background about Arbolus, your closed targets, and also the backdrop to you coming into the role. I think was really interesting. I remember when we met, it was you coming in and almost sort of changing the tech stack. I know Alex had done an amazing job previously as the sort of Swiss Army knife, and you came in at an inflection point. So it'd be amazing to get a bit more background context.
Yeah, cool. So as I mentioned earlier, we've got 4 global entities, with the UK kind of being the top co, holding the revenue, and then the other offices kind of being operational bases, so just housing staff costs, and things like facilities, really nothing too complicated, and then all those costs kind of get rolled up into our consolidated top co. So I guess in terms of your point of kind of where I came in, like David said, shout out to Alex, my finance manager, who'd done an incredible job of kind of managing this growing beast for a good couple of years, basically by herself. I kind of came in, and we're now at that time where we really have to be really looking forward to the next few years, kind of leveling up many different things like scalable tech stack, kind of reviewing that. Obviously that then supports things like financial accuracy and compliance with tools like Mayday, and I guess thinking ahead to more sophisticated kind of management reporting, thinking about an audit maybe in the next couple of years, the kind of the compliance aspects, and our international offices, Barcelona, we've had for a long time, but India, US kind of sprung up reasonably recently. India's been a very recent one, which is a super exciting kind of growth place for us, in terms of like this amazing talent we're getting out there, and very much like a center of excellence. So I guess linked to all of that, kind of tightening the ship, getting processes scalable. Month end, we say we're kind of working on a 10-day target, with 10-day being kind of the board reporting day that we're aiming for now. So it's not like 10 days to have the bookkeeping done. I'd say we're kind of working towards like more like, well, billing all is only happens at month end. So that's a big challenge. We've got a great kind of accounts receivable manager on board now. So he's kind of taken that off our plates. And then a couple more days for kind of journals, bits and bobs. And then a lot of the time's kind of spent on, well, we're kind of building in more reconciliation processes now, intercompany reconciling, hopefully going to be made even easier shortly by future products. And then the consolidation is something that we didn't provide when I joined. So that's been something that I've worked on since joining, is getting the console set up in Joiin, and getting that out to board and management ASAP. And then I guess plan for this year is just continuing to build out that and refining processes, and building out some more kind of, because all these things allow us more time to then have more interesting management reporting, more interesting insights analysis, and do the fun stuff instead of the boring accounting. I probably shouldn't say that as an accountant, but it's much more interesting.
So it sounds like done a lot of great work, continuing to do a lot of great work to enable you and the team to sort of rise up the hierarchy of needs in terms of value that you can deliver and do more interesting work.
Yeah, exactly.
And in terms of any of the international operations, Harriet, is all of the bookkeeping and the accounting done by your in-house team, or do you use outsourced providers in any of the territories?
We use outsourced in India. I think I mean personally, I think when we get to the point of having, maybe we can have a local team, but I just think because there's quite a lot of complexities and kind of nuances in the Indian accounting, or like the different taxes and stuff, find it much, and the local bureaucracy as well. Definitely recommend getting local accountants somewhere like India. So they kind of like a fully outsourced function, and we just like liaise with them throughout the month, and then review kind of the bookkeeping at the end of the month. For Spain and US, we do it all ourselves, and that's kind of supported by, for example, we've got Spendesk, and we can get all the entities like Spain, US, UK, all on our Spendesk, which is great. It makes it super quick. Other processes like in those jurisdictions, you can get like automated bank feeds to Xero, things like that. So those are easier to do. We have local tax specialists, so we don't do like the tax ourselves, and local people to help us with like statutory accounts and things. So anything more technical we outsource, but day-to-day bookkeeping is done in-house.
Amazing. Well, look, thank you so much for providing us with that background context. That'd be so useful for me and for everyone else, to kind of have as a foundation for what comes next. We're just going to jump ahead now to another quick poll around pain points with multi-entity. So here we go, and there should be another poll coming up on your screen right now. So what is the biggest challenge for you of month end? And feel free to select multiple of those. maybe please don't select all of them, otherwise it somewhat loses the value of the survey. But yeah, feel free to select multiple ones. And just whilst everyone's working through that list, we've got a great question come through from Martin for you, Harriet, around, are all 4 entities in Xero and in their local currency?
Yes, they're all in Xero. Xero works perfectly well for yeah, I mean, I think potentially there's better options in India, is what we've been told, but for much easier if they're just all on Xero. So yeah, all on Xero, all in their local currency. Yeah, that's a good point actually. So they're all, well, GBP, USD, Euro, rupees, and then we consolidate in USD to throw an extra level of challenge on top. And then our statutory reporting for the top goes in GBP. So we've got a few things to contend with.
Amazing. Well, thank you so much for answering that. And brilliant. Well, look, we've had a good opportunity on the month-end challenges. We'll just do a few more seconds on that. We've had Alex, the finance manager at Arbolus, has just posted a big pain point was posting bills, invoices on the entities, although this has been solved by Mayday. Alex, you're too kind, but very, very nice of you to contribute that in the chat. Graham's just asking, what consolidation software are you using, if any? The only consolidation software that someone attending this webinar should, I'm going to answer this for you, Harriet. The only consolidation software that someone should be considering if attending this webinar in Joiin. So there we go. Thank you very much, everyone, for the questions that are coming through. Okay, great. We'll close the poll now on the biggest month-end challenges, and those answers should be up on the screen any second. All right,
Interesting.
Here we go. So bank reconciliation, posting bills and posting invoices, not so much. And I think that really speaks to Harriet, I'd really welcome your perspective on this, but I think that sort of speaks to Xero's competence with its bread and butter of those areas. And it's really interesting to see the three biggest pain points there: managing intercompany accounts, consolidation using Excel spreadsheets and journals, which is much more the pre-RP area that isn't the core focus of a system like Xero, that those are coming through quite clearly as the main pain points there. And then just the overall workflow, which the challenge of that scales linearly the larger the team you get. So really, really interesting to get those results. Harriet, any comments, any thoughts on the results we're seeing there?
Yeah,
I think, well, I'd say, I mean, posting invoices, it really depends how complex your business is. I mean, that's been the pain point that we've kind of solved. It used to be very difficult. So I guess that's subjective, but yeah, completely agree. On all the other stuff, that's all kind of areas that Xero falls down. I mean, including journals to an extent, having seen like how sophisticated you can get with journals in NetSuite, for example. Yeah, I agree that. But I guess journals probably links to like all the background stuff going on, like the recs and the balance sheet reconciliations. Yeah, I agree.
Yeah, I was just going to add, it's really nice to see kind of the major pain points here are things that are kind of solved by that kind of beautiful Xero ecosystem, isn't it? Really, you've got the ones that are kind of more consolidation focused with Joiin, but showing kind of the real value of kind of a growing Xero ecosystem and how good that's going to be, and really nice to be a part of that as well, actually.
Yeah, amazing. Well, thank you so much, everyone, for being so sort of forthcoming with your responses. They're really, really useful. We've had a question through from Alison about, we've just incorporated our first subsidiary and set up in Xero. What is your advice for setting up in Joiin? If it's okay, Alison, we might come back to that. Harry, I know you're going to do a demo later, so you'll be able to address Alison's question then. Will that be okay?
Yeah, absolutely, Alison. So I'll go through your initial setup. I'll give you let you into a little secret. It's very easy to set up and Joiin once you've got your Xero account set up. But I'll go through very briefly the kind of the setup process, and then kind of the overlays and what you can add on to Joiin. And any questions, I can kind of reach out to you personally as well if you've got any.
Amazing. And then we just had one more from Cindy. We have more than 20 entities in the group, with only 4 entities getting the bills and then recharged back to other entities. Well, you can see my smile and eyes light up with this. So end of month intercompany recharge journals takes quite some time, and so posting errors requires additional correction time. If Xero is capable or has additional functionality for intercompany journal auto posting, that would be great. Well, Cindy, stay tuned. Is all I say on that. We're very, very excited to give you a demo of the quick demo of Mayday with our recharger product later. And Harriet, I know, will be able to provide some sort of additional context on how they use it and the impact that's had at Arbolus. So yeah, so a couple of great points for both our respective products there, Alison about Joiin and Cindy in relation to Mayday. Really excited to come back to those later in the webinar. All right, amazing. So we're now going to move on to the kind of, the black box, the special, kind of tips, the kind of core of this webinar. So Harriet sharing her insights about multi-entity month end with Xero and her top tips. The way that we're going to approach this is, and this was a great point and suggestion Harriet had in the planning session we had, that it's process before tech. Tech amplifies and enhances a great process, but it can't solve limitations from a process perspective. So there's going to be 3 elements to this: the process side of things, then Xero itself, and then accompanying tech like Mayday, like Joiin, in and around the process. So, Harriet, again, thank you so much for taking the time to share these. Over to you.
That's okay. I probably will end up overlapping somewhat because the tech and the everything's so ingrained. But yeah, I think I'll just kind of go through what process we follow for our month end and kind of ways we've found to make things as smooth as possible. So yeah, I'd say very much doesn't start on the first of the month, starts as probably at least 5 days, probably in the week before you're really getting your head in gear, and hopefully throughout the whole month you're thinking about month end as well. So yeah, it sounds really obvious, but doing bank recs, if you've got the team capacity to do your bank recs, clear down your tools. If you've got something like a spend desk every day, it's always good to just, best to keep on top of these things. Bank recs at bare minimum, doing the customer payments every day if you have capacity, so you're not getting like emails pinging off to customers that shouldn't. There's other things you can do in the month. For example, like if there's a part of your month end, maybe you're invoicing. For example, for us, it's invoicing that relies on other people doing approvals. So we have to have all our transactions approved by managers before they can go for billing. We are like chasing them in like mid-month and running up to the end of the month. I've worked with businesses before that have timesheets that are also a blocker to invoicing. So getting that stuff done like well ahead of time is important. You can do things like rolling forward your checklist for the month end. Like we use ClickUp just because it's one we have internally anyway, that we maintain like a month end checklist that gets rolled forward with the new dates. We do that before month end, posting payroll journals, rolling forward reconciliations. The list is slightly endless with what you can do before month end. And then I guess so that's up to the end of the month, and then we then start our month end process, billing being kind of one of the most urgent thing to get out, because we only bill once a month and we're billing for the transactions that have just happened. And then finishing the bank recs, clearing out stuff like clearing out your spend desks. Top tip for bank recs, never trust the Xero bank feeds, however pretty they look, and do make sure to check back to the actual bank statements as well. So things like our bank recs and other recs, so slightly diverging, we've recently set up, if you use Google Sheets, a bunch of our recs, all of them really, in Google Sheets using a tool called Joiin, which is a very cheap kind of API tool that links straight to between Xero and Google Sheets. You can run loads of different reports, you can customize them, run transaction listings, you can set them to auto refresh. So it just means that like every month, rather than uploading reports from Xero, you can just quickly refresh the sheet or even have it auto refreshed before you even get there. I personally like to have, rather than like, this is the beauty of Google Sheets, rather than like having where possible, rather than having one version of a reconciliation or a workings file for each month, you can easily build out just like one for the whole year and just add the new months as you go. Keeps everything a bit tidier, and then you've got the beauty of version history in Google Sheets, so you don't have to worry too much about the painful kind of archiving and making the different versions of things. Cool, so that kind of covers, yeah, we've done your bank recs, got spend lists, things like that cleared down. And then, yeah, I think you can't really start manual journals until you finish the bank recs. Well, I would not recommend, in case, for example, there's things that should be in prepayments, there's things that should be accrued for, and there's things that should be fixed assets. So very much have to lock down that, check it against your actual banks, and then move on to, yeah, journals. Again, journals, Xero is fine if you're organized. Definitely recommend setting up recurring journals for everything where you can, especially things like prepayments. As soon as you see that bill come through, just go straight to the journal module and set that up recurring each month. Just saves so much time. Yeah, so we've got that all posted. Payroll journals, hopefully you can post already, if it depends when your payday is. And then, so we've got all, technically then bookkeeping should be done, and then we kind of move on to our review stage, where we've got all our local currency management accounts, just a rough kind of version in a Google sheet, which is again linked with Joiin. So we just click refresh, populates, and then we've got kind of conditional formatting and different things that flag major variances. So we've got like a front tab that says we want to look at variances over X percentage versus last month, with a de minimis of don't care if it's like under a certain set value, $1,000, something like that. So that quickly highlights need to put the variances, type them in, go and have a look why, and then we have a couple of layers of review. So our kind of finance assistants will do first variance analysis. Alex, finance manager, does a review, and then I'll do a review. So then that's kind of locked in, and then we can move on to the wonderful part, which is consolidation and intercompany. Because all our subsidiaries kind of recharge at the moment, are recharging cost plus all their operating expenses to the topco in the UK head office. We kind of can't review that until we've locked in the subsidiaries, done the intercompany invoices, and then we can review kind of the topco, which is kind of like a proxy consolidation, but not quite. By the time we've done that, yeah. So I guess, yeah, before to do these intercompany invoices, there was a lot of kind of copying and pasting each of the GLs onto kind of from the subsidiary Xero into like an invoice for recharging to the parent company. Now it's very quick. We just make sure Mayday syncs, we've set up all our rules in there, and then literally, I mean, there's much neater than before, so it just takes from like, yeah, half a day to maybe half an hour or something like that. And it's also great because if we make any, obviously sometimes you do these things and then you notice issues afterwards, and the way we were doing it before, you then have to manually go kind of redo everything. But now with Mayday, you can again very quickly just reissue a new updated invoice, which is great. Intercompany recs is kind of a work in progress. Kind of, we know, I think there's probably kind of FX differences and bits like that that we need to work on kind of resolving. Yeah, on a bit more regular basis, hopefully with Mayday's help in the near future. And then so I guess by that point we should be happy with everything in local currency. Then we can move on to consolidating in USD, which again, I mean, Harry will show you. Joiin is super intuitive and easy to use. Syncs really easily. We can kind of play around with the report format as much as we want, and we tend to house like a much more kind of succinct and summarized version of the financial statements in Joiin, because for the kind of board and investor reporting, they're not too interested in seeing every single little detail, and Joiin spits out really like nice presentations, so much easier to manipulate than the Xero reports. And then hopefully we're at day 10, everything looks good, and then I just download the final console and circulate really. That's it.
Amazing. Well, I know I speak for everyone there, Harriet, when I say thank you so much for being so forthcoming and just so generous with your invaluable tips and insights. We've had some great questions come through. So Donna asked, how do you ensure you have all of your supplier invoices included?
So we've got Spendesk, which is really good. So basically individuals, the purchasers are responsible for uploading invoices to Spendesk. And we just introduced, India's a bit separate, but I don't need to go into detail with that. But so Spendesk, we actually don't, we're quite lucky. We have, I'm sure lots of businesses are going this way, relatively low like payable invoice volume. A lot of it's on the Spendesk cards, for software subscriptions, for travel. We've got like just moving to trip actions, so we've got like a vendor for that, so everything just comes through. And then like other bits and bobs like food and I don't know, travel expenses goes on the cards as well. But yeah, I think everything in theory should go through Spendesk. If not, it should go to the finance mailbox. As long as Spendesk is cleared down, we know we've got everything. And then most of our costs are when you look at the variances, you might notice like regular things. That's a good point as well. Variance analysis is, you'd be surprised how much you can pick up that's missing from just doing that. You can quickly see if anything material isn't there.
Amazing. And then Matthias has asked, do you create a functional SaaS P&L as part of your reporting pack? And is there a way for you to do this?
So we're not, we're not pure play SaaS at the moment. So we don't currently, although there are aspects of SaaS, what we do, our new products are much more SaaSy, if that is a word. If not, it should be. But yeah, so in terms of, I mean, I guess what you mean by SaaS P&L, whether it's a couple of versions of that, is like kind of the US centric SaaS P&Ls with like the different, I don't know, different function split outs. We don't do that at the moment, so we can think about. We don't. So I guess in summary, no, at the moment we don't follow like a SaaS P&L format, but yeah, definitely it's probably something we will be looking into as we grow and see how we develop and what the investors are interested in seeing as well. We do report some kind of SaaS-esque metrics, like ARR, even though it's not kind of strict SaaS ARR. But yeah, good question.
Amazing. And look, we've got some other fantastic questions that have come through here. So and they're quite sort of specialist ones. So Richard has asked, does Harriet have a way of making Xero compliant in Spain for filing for the Spanish Modelos? Alison has asked, top tip for incorporating US sub. So what I might do is we can come back to those at the end if we have time. A couple of kind of product related points which segues really nicely into what we're going to do now. So Andrew's asked about why can you not use Xero to Xero invoicing for invoicing the topco, and that'll become clearer the answer to that Andrew, when we run through Mayday and Recharger and how it effectively is zero-to-zero invoicing at the back end, but it's automating all the calculations. And then Matthias has also asked, is there a way to keep the retained earnings from translating in Joiin? So Harry, I'm going to sort of pass over to you now for the Joiin section. We've got that question and Alison's question previously about, we've just incorporated our first sub in the US. What's your advice for setting up in Joiin? And yeah, really excited to pass over to you.
Okay, great stuff. Thank you, David. So I'll just begin sharing my screen one moment, and hopefully I cover off Alison's question initially very nicely. But then I'll also I'll come back and look at any at the end as well in our kind of Q&A session, if that's okay. So I'm just going to share my screen. Okay. Right, I'll just get a thumbs up from David or Harriet if I've got the Joiin screen on in front of me. Lovely stuff. Okay. So I'll kind of go through the initial configuration setup of Joiin. With a particular kind of nod to Alison, but I would have been doing that one anyway, kind of talking through the simplicity. So everything within Joiin is built around kind of creating a really simple and hassle-free product that you can come on within a couple of minutes, complete your consolidation. Obviously, you've got overlays on top of that, and you've got kind of deeper complexities that you can add on top, which I'll also come to at the end. So in terms of setup, you should be set up and kind of have your Xero companies within Joiin within 5 minutes, kind of 1 or 2 minutes it takes per company. So you go to our website, you press sign up with Xero, an account is created with your single sign-on, your Xero companies will be loaded up. That's that kind of 5-minute process there, just waiting for all the data to come through. You'll then find yourself at this page here, which is your companies page, which just has a little bit of information about each of the companies you've got loaded up. So you can see here, we've got some Xero ones, but equally, like I say, you can connect to QuickBooks and Sage, or you can use Excel sheets as well if you're kind of outside of any of those. So what I'll do is I'll show you some basic reporting within Joiin with a particular kind of focus on some of the things that Harriet and I have discussed about how Arbolus or how Harriet uses Joiin, and then I'll show some kind of overlays on top of that as well. So I'm just going to use this navigation bar to go on over to my balance sheet. And I'll just show you, like I say, the basic functionality of running a report within Joiin and the simplicity of it. I'll touch on some of your intercompany transactions, your eliminations, some of your adjustments at month end, and then I'll show you customizability and then our kind of outputs as well. So our nice pretty report packs that you can show, you can present, show to the board, download, etc. So starting off here, kind of running of the reports, you select the companies you'd like to include in said reports. So I've got all of the companies that I've got listed here. I'm just going to choose these 2 for kind of simplicity. You've then got the reporting currency here. So all of the currency rates are performed for you. Equally, you can overlay particular rates if you've got them in mind. And then you can choose your kind of reporting period over here. So I'm just going to run a kind of a very basic balance sheet for my 2 companies for January 2022 British pounds. And you can see here, I've got essentially company A and company B with a total column over here. So that's kind of just an amalgamation of the 2 companies here. Without those kind of intercompany transactions and eliminations laid on over the top. So something that Harry and I spoke about is kind of first would be kind of managing of the intercompanies. So that's all done within settings, and then you go to chart of accounts. And what you do here, well, essentially you have a list of every account across all of your different Xero instances, as you can see. And you'd go through and you'd essentially tell Joiin which ones are intercompany transactions. It's kind of your first port of call. So you press that eliminate button. I've already done these ones previously, and so I'm happy with my elimination. So I'm going to go back on over to my balance sheet, and I'll talk some more about the elimination process. So I've gone back over my balance sheet. What I can do now is I can configure how my intercompany transactions are managed within my Joiin reports. So I'm going to click on this configuration box up here, and I've got a couple of options. So I can remove eliminated accounts. So that's kind of once I'm happy with my eliminations, they're moved outside out of sight. You've then got the show eliminated accounts only, which is kind of that checking mechanism to make sure that A, you've selected the right accounts, B, they match off against each other. I'll talk on more in that in a moment. And then you can temporarily turn off eliminations, or you can show your eliminations on screen as well. So I'm going to show just my accounts that I've tagged for elimination as a starting point. And for the kind of the eagle-eyed view, you'll notice that these two don't match off against each other. That's kind of a fundamental issue, I guess, isn't it? The intercompany recharging between, if you're particularly operating in kind of a multi-currency environment. I've got here, so these two accounts, basically just because of some slight FX differences, don't bounce off against each other. So this might be kind of an example where you might need to post an adjustment within Joiin. We make it really simple for you to do that. So that can all be done within the companies page over here. We go to our companies page and you can press add company, and essentially what you can do is you can create a kind of a consolidation company that you can overlay. Again, I've done that one previously. I've got down here this console adjustments. So I'm going to open this one. I can post any adjustments that I would need on my reports in here. So you can see I've got this little FX adjustment here of 256 Great British pounds. And now I can go and include this kind of elimination company and we'll see where that gets us. So again, going back over to my balance sheet, what I can do is I can now include those consolidation adjustments. I can also remove those eliminated accounts that we spoke about previously. And now I have my consolidated balance sheet all balancing with kind of your adjustments and your intercompany transactions managed within Joiin. So that's kind of relating back to something that Harriet and I discussed, kind of really kind of nailing on that one. What I'll do now is I'll kind of go show you some more of the kind of the fruitier, more customizable aspects of Joiin as well. So I'm just going to close that tab, and I've got kind of a P&L that I pre-prepared, and I'll just talk you through some of the options just to give you a bit of an idea of how that works. So here we have one of our kind of heavily customized P&L reports. So as Harriet was saying, again, she likes that kind of very kind of high level view sometimes if producing reports for kind of investors. So we've got a pretty kind of dumbed down, I guess you could say, P&L with some kind of groupings all collapsed. You have the ability to overlay on that charts. So you can see here we've got some charting, formula analysis, and then your grouping tool. So you can use that to remap any kind of variations between the different chart of accounts, create groupings, meet any kind of statutory requirements you need. Really flexible tool within Joiin, and we always say it's definitely worth having a play with your own data, see what you come up with, and see kind of what magic you can create, I guess, as well. So once you're happy with your reports, you've got a couple of options of what you can do with them. Essentially, you can download to Excel or PDF, or you can add them to a Joiin report pack, which is that kind of more aesthetically pleasing output, I guess. So a way to group multiple reports in one place. So I could go through here and I could select this this webinar report pack, and I could add it in there. Again, I've already done so previously, and now I'm just going to go over and just really scroll through one of our Joiin report packs, show you kind of a flavour of some of the other reports I wouldn't have had time to show you in the demo, and what those ones look like as well. So I'm just going to open up this this webinar report pack. So again, it's all very much customizable. You can add logos, branding, colors, etc. You can change these cover images. I've kind of got an extensive list to choose from. These are these little clouds. I think they are my personal favorites. So I'll save those ones. And again, these ones can be downloaded as PDF or Excel as well. So I'm just going to scroll through to finish off, showing you kind of a view of the report packs and some of the reports I didn't have time to show you previously. So we've got one of those balance sheet reports that we spoke about at the very beginning with our kind of company A, company B, and then all the consolidation adjustments over the top. We've got a month-end P&L with a nice bit of commentary here, and then some deeper, kind of more fine-grained reporting. So we've got some previous year comparisons on that nice P&L there, taking it to kind of another level. Something pretty new to Joiin, so forecasting. So we've got kind of the ability to now present forecasts. We've got some kind of forecasted revenue here against a nice chart. And then finally, we have KPI reporting as well within Joiin. So kind of customizable KPI, nice charts, graphs, etc.
Amazing.
So that's a bit of a kind of a whistle-stop tour, I guess. Any questions, please feel free to kind of pop them in the chat or email us support at Joiin. But I'll hand back over now. And I think we've got a Mayday webinar coming up, which I'm very much looking forward to. Right, so I'll stop sharing now, David.
Amazing. Thank you, Harry. I will just take up the running. So yeah, thank you very much for that. Amazing to see the kind of brilliant and beautiful consolidations that people will be able to access. Okay, can I just get a thumbs up from everyone? Is my screen share coming through okay? All right, we're going to talk through the 3 pain points. So the first is the recharging of costs and revenues. So we had Cindy's example earlier. We had Harriet sharing her example of where you've got to make recharges between the related entities as part of month end. Today, that's manual process of identification, calculation in some form of spreadsheet, and then manual posting back into the relevant Xero entities. Not anymore. So you bring together your related entities in Mayday. We've got the 3 in our group here, but you can have any number. So Cindy, you can have your 20, any geographies that Xero supports, we support, any currencies. And then really, really simple, you create your recharge rules. So if you think Xero bank rules apply to your intercompany charges, point the rules at the transactions that they apply to using any combination of tracking category, account code, contact, reference, line item description to pinpoint them. Tell the rule how those transactions should be treated for recharge purposes. So here we're saying apportion these subscription costs by headcount across the group. Tell the rule which account code to post to in the entity receiving the recharges, any tracking categories that should be applied, and you're done. So you do that across all of your recharge situations. You can do that at cost. You can apply cost plus. So that's the Harriet and Arbolus example where per their transfer pricing policy, they're marking up the relevant costs in making the recharges. You can also recharge revenue where you've got one entity is generating revenue, some or all of which belongs to another related entity. So you get all of your rules in place, and then your new intercompany recharge process each month, to Harriet's point. And I love the way, Harriet articulated it in the case study we did together. It's taken intercompany charges from being a job to now just being a simple task as part of month end. You've done your bookkeeping, you've done your journals within each individual entity. You jump into Mayday Recharger. You make any updates you need to your rules or your apportionment factors like headcount that you use across your different rules. You go to calculations, much like running the depreciation journal in Xero. You choose the month that you want to run your recharges for. Here's one I prepared earlier. You then get this, so no more spreadsheets. You've got this, which is effectively like a multiplayer VAT return, sales tax return, GST return for your intercompany charges. With all of the rules you set up, they've picked up the different transactions, and now all you need to do is run down this list and make sure that you're happy with how all of the transactions are being treated. Every now and then there'll be outliers, so you can easily override the recharge treatment. Calculation updates. When you're ready, you jump through into postings, and this is all of your different entity-to-entity recharges across the group. And you choose whether you want them posted as invoice and bill, or journals, draft or fully authorized, where relevant, what currency you want them posted in. And then you one-click post them back to Xero, and that posts both sides. So this is to the question earlier about using Xero to Xero invoicing. That's effectively what we're doing here. We're posting both sides simultaneously to the relevant Xero entities, so no risk of asymmetry. And that is your new and improved intercompany recharge process. Before I get into the kind of second and third products, I might just kind of dive over to Harriet here for a bit of context about how you use it at Arbolus and the impact it's had.
Yeah, sure. So it's pretty much what you've gone through. Once everything's final in Xero, we kind of make sure any new account codes have the rules set up in here. And then we do the calculations, all very straightforward. We post them, I think we post them as draft into Xero. Make sure it all looks okay. We just check that because we've got a relatively simplistic TP policy at the moment, which is just cost of OPEX plus a markup. It's really easy just to quickly check against P&L, make sure nothing's missing. Click post, markers, all approve them in Xero, and then it's done. It's very, very quick.
Amazing. Well, thank you so much for sharing that, Harriet. And so that's Mayday Recharger for the intercompany charges. The second and third parts of our intercompany module. So the second one is for the situation where you've got this. One related entity has made a payment, has a bank transaction. I see Xero never sleeps. It's logged me out, but I'm back in. So hopefully, is everyone seeing the Xero bank rec screen come through here? if I could just get a quick thumbs up from Harry. Yes, amazing. All right, great. So we've got the Xero bank rec screen here. You've got this situation. You've got a transaction that you can't match to a bill in Mayday HQ, and that's because they've made a payment on behalf of another related entity. So you've got the pain of having to switch through all the different Xero files to find the bill, then mark it off to the intercompany account, then come back into Mayday HQ. I'm getting tired just running through this. Then come back in and then post it to the relevant intercompany account, remembering what the bill was in the first place. Now you have the Mayday tab in the Xero bank rec. So all of this within the existing Xero bank rec to enable you to match bank transactions to bills or invoices of your other related entities. One click, done, marks that bill as paid in conjunction with the account mappings that you've done in us, post to the relevant intercompany loan accounts, done in one click. So this is cross-entity bank rec for you. The third and final part of our product suite, the intercompany module, which will be live by the end of this quarter, is Mayday Balancer, keeping your intercompany loan accounts in balance. So flagging to you where what entity A shows it's owed by entity B is different to what entity B shows that it owes entity A, which can be a posting asymmetry issue. So enabling you to match the relevant transactions between the entities. Could be an FX issue. So enabling you to easily post the FX adjustments to true up your intercompany balances, again, similar to the way that you would do with your depreciation journal as Xero. And then also enabling you to post the interest that may be charged on those intercompany accounts. And again, to keep that in balance across. So Balancer is going to be the safety net for your intercompany loan accounts to ensure that they always stay in balance. That is Mayday. So thank you very much for kind of the time to enable me to share that with you. We've got about 7 minutes left, so I'm just going to take a look at the Q&A. It looks like we've got some great questions that have come through about both Joiin and Mayday. So first one, we've got, can Joiin and Mayday consolidate from multiple sources? I'll take that first and I'll hand over to Harry. So right now we just integrate with Xero. So all of the entities need to use Xero. That will change in the coming months and quarters, but for at least this quarter and probably the first half of this year, it will just be Xero.
And then from a Joiin point of view, so this can cover off quite a few questions I've looked through. There's some variations on the same question. Joiin will connect to Xero, QuickBooks Online, and then Sage Business Cloud kind of automatically for the API. But equally, if you're outside of that, so I know there was one mentioned about kind of a Turkish subsidiary that's using something outside of that based on Excel, I believe. All of that can be handled within Joiin. You can essentially, we provide for you a template that you can just put a trial balance into and upload your data that way. Really nice and simple. Someone from the support team is kind of happy to kind of guide you through it, but the majority of people just kind of load up Joiin and then kind of can follow the user guides themselves.
Amazing. And then I'll pick up a question from David and Cindy have come through. So Cindy mentioned, I believe this is recharge of head office costs to the underlying group entities, which is a little different. Absolutely, we cover that, but it's the recharge of any entity's costs and revenue. So any entity can have those recharge rules to recharge their costs and revenue. So if you've got recharges between your Xero group entities, Mayday will be able to help. David asked about overhead costs that are split between different divisions by tracking category with one entity based on headcount. So that's effectively interdepartmental recharges. That's something we're really excited to deliver later in this year. We talked about our mission to mend month end. We'll get into single entity functionality, including cost journals and revenue journals. If anyone's interested, you can see our public product vision on the website, which details more about this. But right now, it's only recharges between different entities, not within a particular entity. Harry, were there any more Joiin questions in the Q&A that you wanted to pick up?
Yeah, of course. I'll pick as many as I can up. There's kind of there, as David will be able to see as well, they're kind of the firing in for both of us as well, aren't they? So I'm just going to pick a couple here. So this one's from Anastasia. And Anastasia is asking, is it possible to display budgets on Joiin if they are not already loaded into Xero? So again, we pull in budgets automatically from Xero. If you have budgets outside of Xero, again, they can be uploaded into Joiin very nice and simply. Again, we provide you a template to manage that one. So one from Michelle. Any plans to extend Join's cash flow options to direct as well? Because at the moment, Joiin only manages the indirect cash flow. Yes, very much so. Part of our plans and quite a popular request. Michelle, I'll follow up with you afterwards just to kind of understand your specific requirements, but and I'll also kind of keep you posted on any developments on that one.
And I'll just pick up Andrew's question about the intercompany reconciliation tool. Once set up, will it look back historically to show unbalanced items? Yes, absolutely. So that's what Balancer will do. It will be constantly checking to check both sides of the intercompany loan account to see that they're in balance. In relation to Mayday Recharger, it will flag if there are any late transactions that come through in respective periods for which you've already run your recharges. Harriet touched on this earlier. If there's a change, we will flag to you that there's been a change in the transactions. You can then come in and easily edit and update the recharges and update the posting to Xero. All right, amazing. Harriet, are there any there from a Joiin perspective that you wanted to have?
There's one more that's coming, I think, based on some of the discussions that you've had, actually, and this one's from Sarah. Can Joiin bring in filtered data from Xero? So in this example, departmental data. Yeah, all of that's brought in automatically, can be run on your reports at the kind of consolidated level as well. And then for any of you using QuickBooks classes, locations as well are also brought in by default. So I think that, yeah, most of the other ones are quite specific. And like I say, I'll follow up with every single one of you kind of personally via email.
All right, amazing. Well, look, I'm conscious we're coming up on the time, and it's just, yeah, it's so brilliant that we've we've really obviously tapped into a key area where there are lots of questions. So thank you everyone for all your great questions. Thank you to Harry and Harriet for answering all of them, because there's a lot of value that's been shared in the room. So just to close off the webinar, thank you very much, everyone, for joining today. From a Mayday perspective, and I'm sure, I know Joiin is seeing this as well. We're approaching the first month end of the year. We're seeing a lot of people in new year, new month end habits. So we're very excited to be one of your new and exciting and improved month end habits. As I mentioned earlier, we've got a promotion that we're running whereby if you sign up for a 30-day free trial before the end of January, you'll have the ability to access a promo that gets you 50% off in 2023. You don't have to subscribe before the end of January. You just need to set up the free trial. We'll be sending out the promotion details off the back of this webinar with how to take advantage of that. But look, the final thing is just to say a massive, massive thank you to Harriet for sharing her insights. This was an hour-long webinar, and there's basically been no drop-off in attendees. I've been looking at it as we've gone, and that's sort of unheard of from my perspective. And I think it really speaks to the incredible value that you have delivered to everyone who's joined today. So thank you so much for taking the time.
No, not at all. No, thanks for having me. That was great.
Amazing. Well, I hope everyone has a great rest of the day, however many hours left in it they have, depending on where they're joining us from in the world. And thank you very much for joining us for this multi-entity month end with Xero webinar.